Hey, bro, you better get ready to buckle up because this shit don't get no easier, bro. Once you think the grind gets easier, come on, bro, you silly, man. This grind's only for the strong ones, bro. And if you weak, I suggest you go ahead and leave. It's tough, but it's true. Be safe.
Until you figure it out, find you a hustle, make your money, and like you gotta have something figured out. Like you gotta have a goal. And you just gotta work towards. You gotta manifest. So like it's a whole lot of power in your tongue, and you just gotta speak it into existence and work.
You gotta be cool, not ever being recognized. You gotta be comfortable with that and not feel a way about it as long as we get into the check.
What's happening, everybody? It's your boy Creative. Go ahead, say it with me. We are back at it again to do what? To create something great. Now, I'm super excited what I have planned for y'all today. I'm going to be starting something new. We're going to be calling this series our vibe coding session, right? Now, I know I've been doing this with y'all for the past couple of weeks, and I'm not going to hold you. I've only been coding since about April of this year, and I've only recently found algo trading or algo creating an algo bot or a trading bot or whatever synonym you want to use there since about July of this year. I started with meme coins. It wasn't until like August, September that I made the switch over to options, and it's been very well. Right. And just lately, I've been sharing my coding sessions on how I create the strategy, how I create the bot, how I back test the whole nine. So, what I want to do is create a new session or a new series, right? Where we're going to be building on top of our work, and this is going to be called our vibe coding session, right? And today we're going to be building a new 0 DTE spy option strategy. 0 DTE lets us know that this is an option contract that expires the same day, so we have to be quick with our moves. Excuse me. I'm not going to hold y'all. If you do hear intermittent silence, that means that I just have to pause and burp. I decided this wasn't a great idea, but I decided to drink a ginger ale before I jumped on the stream here. So like every so often, like all right, a little burp will come up, and I'm not trying to burp in here, so I'm going to mute the mic. So if you do hear just an intermittent pause, that's what that is. All right, let's keep going. So we're going to be building 0 DTE. 0 DTE lets us know that these are option contracts that expire the same day. I'm going to be using SPY. What is SPY? SPY is the S&P 500. This is the top 500 companies within the New York Stock Exchange. SPY is an ETF. What is an ETF? An ETF is an exchange traded fund. Whenever you think of an ETF, I want you to think of a quilt. You know how every quilt has different patches, right? So this quilt has 500 different patches, right? All making from all different type of sectors, from healthcare to banking to tech, right, to oil. So like SPY has many different sectors within it, and what we want to do. Matter of fact, let me not guess. Let me see if I can see it real quick. All right, let's just go to holdings because I know what that is. So the holdings. This is just the top 10 companies, but again, it has 500 within them. So we have Nvidia, we have Apple, Microsoft, Amazon. This is Google. Don't ask me why they decided to call themselves Alphabet Class A, but this is Google. Little weirdo. This is Broadcom. This is YouTube, the little cousin weirdo. This is Facebook. I will never call you Meta. This is Facebook. This is Tesla, and this is Berkshire Hathaway. Right. So these are just some of the top 10 companies within SPY. And the reason I like using SPY is because it has high liquidity. So what does liquidity let us know? Whenever we want to buy within an option, right, there's always somebody there to sell it to us. And whenever we want to get out the option, sell it, right, there's always somebody there willing to take that bag from us, right? So high liquidity, high volume. What is volume? Volume meaning, so imagine you go into a club, right, and there's nobody there, right? With SPY's club, it's packed. I'm talking about to the Raptors, where like if you don't know nobody or if you're not trying to pay 200, 300 at the door, they're not letting you in. So that's another way to be able to think of volume, right? Like it's a building that's constantly packed. There's always somebody coming in and out, always in and out, in and out, in and out, in and out. All right, beautiful. So what I'm going to look right now is the trading view. Trading view is where you can look at the charts for any particular asset, ETF, stock, cryptocurrency, whatever you name it. You can look at it on trading view. And what I'm looking at right now is SPY on the 1 minute chart. So what that lets me know is that each one of these candlesticks represents 1 minute of action, or a battle, if I like to say, between the buyers and the sellers. When you see a red one, that means the sellers have won, or the bulls are trying to make lower lows. But you see this wick pointing out, sticking out, pause. But you see that wick sticking out there, right? Again, ginger ale. That's going to be a little inside joke now. But nonetheless, let's keep going. So you see these wicks sticking out, right? That's letting us know that even though the bears try to push the prices to be able to touch new support levels, right? And whenever we crash through support, what that lets us know is we're setting lower lows. Whenever we crash through resistance, we're making higher highs, right? So what do bulls like? Bulls like resistance. They want higher highs. What do bears like? Bears like support. They want lower lows, right? So whenever we see those wicks, that lets us know that the bears tried to crash through support levels, but it was rejected because the bulls came back in and said, all right, hold my beer. Calm down for a second. I'm in the building, right? Let's have some action. So you see what I mean? Now, same thing can happen for the bulls, right? Bulls could be in charge, and you see that they're trying to push higher highs, right? But right now, it's being a bit rejected right now because the bears are coming in and saying, all right, what you thought this was going to be sweet, right? So they're coming in and they're trying to bring the price down a little bit lower, right? So what we're going to be doing is creating an algorithm. So what is an algorithm? So when you think of an algorithmic trading strategy or an algo option strategy, right? This is an automated decision-making system for buying and selling options based on the rules that we design or you design, right? It's turning your trading plan into clear instructions that the computer can follow 24/7. So there's no emotions, there's no overthinking, there's no greed, there's no fear, right? It's being able to truly let the bot or computer being able to make the decisions for us after we've extensively tested the algorithm. And how do we test an algorithm? We test it by back testing it. Now, what is a back test? A back test, imagine just throwing your algorithm in a time machine, right? And you drop that algorithm back in 2024, and you want to see how well it does on historic data. If it does well on 2024 and 2023, right? And you can even go back to 2022. I mean, everybody has a different school of thought there, but I'll go back 2, 3 years, sometimes 4, if I'm really trying to make a point, to be able to see, okay, how well how well does the algo do on historic data? If it does well on historic data, then there's a high likelihood that it'll do well in the future, right? Now, there's no guarantees. Like, I don't want anybody trying to sell y'all that there's a guarantee that, oh, this algo is going to be printing money. No. If anybody's telling you that, run away and run away swiftly. There's no guarantees in investing in options. There's no guarantees in investing in the market, right? Because yes, you can have a great idea. Yes, you can have a fantastic setup, but shit can go as left as went right, right? So I just want us to be prepared for that and want us to be able just to have that in the back of our mind. Yes, we're going to be able to make this to be as battle tested as possible, right? But there's a likelihood that what we've seen in the back test is not what we're going to be seeing in paper testing. So that's how we do it here, right? So we're going to be, and I know I kind of started before, but this is really our steps. Oh shit, my fault, my fault. I got to remember that hitting the arrows does that. So step one is IDing the asset. So we're going to be using SPY. We already talked about SPY, S&P 500. Step two is being able to build out the entry, right? Entry. How does the trade slash signals trigger, right? So that's where we're going to stay out right now. We're at step, I can't spell entry, entry. There we go, no E. Build out the entry, right? So how does our trades trigger? So we need to be able to figure out how does a bullish And what does bullish mean? Bullish equals we think the market is going to go up, or bearish, we think the market is going to go down. Signal, right? So I want to be able to create a entry that allows us to be able to have a bullish and a bearish signal, right? So before we get into that, now if you do have any questions while we're working on this, please let me know. As Miss Cleo said, let me know. Right. Again, I'm not an expert, but what we can do is talk about it, figure it out as we're building this. All right. So let's keep going. All right, we already talked about what an algo is, right? Just to go over it again, it is an automated decision-making process, right, for buying and selling options. Our algo, you can have an algo for memes, you can have an algo for stocks, you can have an algo for bonds, you can have an algo for binary options, right? So what we're doing is creating an algo for buying and selling options based on the rules that we're going to create. And think of it like taking your trading plan into clear instructions that the computer can follow 24/7. So let's talk about what is an option contract, right? So an option contract is like a ticket that gives us the right but not the obligation. So it's the right but not the obligation. Let's just highlight that real quick so we can understand. All right, there's a big, oh, you can't see that, can you? Again, I'm still learning. You can probably see orange. You can see orange? Yes, you can. So that gives us the right but not the obligation to buy or sell a stock at a specific price. What is that specific price? The specific price is going to be our strike price. So when you think of a strike price, think of it as what the price that we think that the option is going to go to, right? Before a certain date. And what is that certain date? That certain date is our expiration date, right? So what is an option? An option is like being able to buy a concert ticket. And that concert ticket gives us the right to either go to the concert, right? Or we can sell it to somebody else if we don't want to go to the concert and just profit. So let's talk about this real quick, right? So imagine we buy a concert ticket for $100, right? So even if the resale price jumps up to $300, you can still use our $100 concert ticket, right? Or we can profit and sell it to somebody else. In this simple instance, what are you doing, right? Are you pocketing the $200, or are you going to the Drake concert, or are you going to the Kendrick concert, right? For me in my house, let me make my $200 real quick, and I could catch it on YouTube. Is that even a question? Right? So let me know in the comments, what would you do? Would you profit the 200, or are you going to the concert, right? So before we go forward, 0DTE lets us know that this is same day options. These are option contracts that expire on the same day, right? So we don't own the stock yet, but what we do own is the choice to either buy it or sell it later, depending on what the market does. All right. So we already talked about our analogy for the concert. The ticket equals the option contract. The concert date equals the option's expiration date. The ticket price is what the option premium is going to be, and the concert is the stock or the underlying asset that you're going to be able to buy and sell. Big facts, GD. Like, what's the point of being able just to go to a concert? Yeah, it's great. It's an amazing experience, especially if you haven't gone there yet, right? I recommend just go to one concert. But if you can make a quick $200, like, I would do that too. So I'm there with you too. All right. So options isn't ownership. But what's up? Welcome. I hope you're having a great day so far. Options isn't ownership, right? It's control. We're paying for the right to choose what to do later based on how the market moves. All right, so we can understand. And I kind of made I just saw that here. This is a duplicate, but whatever. It's always cool to be able to get more understanding. So one option contract equals what? 100 shares, right? So that's going to come into big play later. So one option contract equals 100 shares, right? So that's why I love being able to use options, right? Because so let's say for an instance, if I wanted to buy NVIDIA, no, never mind. Let's keep going because I'm not going to. Let's keep going, right? 0DTE, we already know what that means. This is 0 days to expiration, meaning that we're buying options that expire the same day. Okay, now there's two type of options that we're going to be purchasing. It's either going to be a call option, and the reason we're going to buy a call option is because this is the right to buy a stock at a set price because we think that the market might go up, right? So when we buy a call option, we're normally what? We're normally bullish on the market, right? Because we think that the market might go up. Now, when stock prices go up, call options go up generally. Right? I just want to preface that because there are some instances where that thing doesn't happen. But generally, when stock prices go up, call options go up, right? And then the next type of option contract we're going to be purchasing is a put option. Now, put option is the right to sell a stock at a specific price, right? Because we think that the market is might might. I just noticed that. My fault. We think that the market might go down, right? So when we buy a put option, we're bearish on the market because we think that the price or the market might go down. Now, generally, when stock prices go down, put options go up, right? Generally speaking, I've seen the inverse happen, but generally, stock prices go down, put options go up. So volatility, if I could get that word out, allows us to be able to gauge what is the market currently doing right now, real time, not in the future, right? So the way that we gauge volatility is being able to use VIX, and VIX is a volatility index or a fear index, as allows us to be able to gauge, okay, what does the market expect to be going on right now? And normally, VIX follows the S&P 500. Remember the top 500 companies within the New York Stock Exchange? Now, normally VIX and SPY have an inverse relationship. What do I mean by that? When you see VIX going up, you're normally going to see SPY go down. Normally, it's about like 85, 90% of the chance. Sometimes they can help each other out, right? So you can see VIX is going up right now, and that's boosting SPY. But normally they have an inverse relationship, right? And the reason we like to use VIX is because it allows us to be able to gauge, okay, what does the market think is going to happen right now? So VIX is at 16. VIX has been cooling all day today. And today is December the 4th, whenever you're watching this. And it's about 3 p.m. in the afternoon, EST, Eastern Standard Time. So VIX has been cooling all day today, meaning that the market wasn't expecting anything big. The market was kind of calm. Like a calm market is sometimes a good market for SPY, sometimes a good market for QQQ. That's another one that we trade. And QQQ is the top 100 tech companies within the NASDAQ. But today we're using SPY. All right. So VIX was cooling all day today. Now it's a little bit jumpy right now. So the VIX levels that I like to use, now there's different schools of thought, but the VIX levels that I like to use is VIX between 10 and 15, 16, depending on the day or depending on the season. But VIX between 10, 16, that's calm markets, right? It's, well, we saw that. We're not expecting anything big to happen. Like, we're super calm, we're super chill, right? Anything between 16 and 22, 24, depending on the day, depending on the season. Anything between 16th and 22, that's crazy. Y'all saw that live, right? So VIX just tried to touch new higher highs, right? So what does that mean? VIX tried to push resistance levels, but it was just rejected. That was crazy. So that can happen here too. What am I saying? Oh, VIX between 16 and 22, 24, we're seeing an elevated VIX, right? So the market is expecting something big to happen. We don't know what is going to happen yet, but we're expecting something big. So anything above 25, we're elevated. The market is expecting something big to happen, whether that's a bearish or bullish move. And VIX be higher than 35, you better know what the hell you're doing. I would not recommend going into the market when VIX is elevated past 35. If you do not, look at that. It's testing new, it's pushing resistance again. Is it going to be accepted? Is it going to be accepted or is it going to be rejected? What do y'all think? And that's crazy that we're seeing this live. And I kind of like this, right? And when you see that big green thick bar right there, that means is that the buyers are coming in and they're convicted to be able to push VIX or push whatever asset high like that. And I haven't seen any wicks yet. So what this lets me know is that, okay, and it's going higher. That bar is getting bigger. So what this letting me know is that the resistance level is probably going to be accepted. And if it's accepted, the buyers are going to try to push it. And this normally happens around this time, the little afternoon, little power hour. See, look at that. Thick bar, bro, nothing. It wasn't rejected at all. So they just took it. So now VIX is a little bit elevated right now. A bit elevated. A bit elevated. Let's go look at SPY. Didn't I just tell you? Inverse relationship. We saw VIX just push and it's pushing resistance right now. We saw VIX start at 16. It's 1610 right now. Can y'all see that? VIX is 1610. We saw it start at 16, and it's making SPY go on a bearish run right now. That's crazy. We got to see that live on how that works. All right. So that's volatility. So that's how I gauge volatility, is being able to look at VIX. There's also VXN, but I'm not going to bring that in right now because VXN follows QQQ, and we're doing SPY. All right. And there's also implied volatility. Implied volatility is what the market expects to happen usually within the next 30 days. Now, implied volatility is going to be option contract specific, whereas VIX is going to be market specific, right? So what do I mean by that? So every option contract is going to have a different IV level, right? So when we have high IV, these are going to be expensive option contracts because the market is expecting a big move to occur within the next 30 days. When we have low IV, these are affordable option contracts because the market is calm, stable, and no big moves. Not now big moves. No big moves is expected. My fault. I was typing a little bit too quick earlier. And no big moves are expected, right? All right. Lastly, what I want to talk about is moneyness, in the money, out the money, at the money, right? Before we actually start to build out our strategy here. So when trading options, moneyness tells you how the option strike price compares to the current price of the stock or ETF like SPY, right? So when I say ITM, that is going to be in the money. OTM is out the money, and ATM is at the money. You can't see green, can you? I mean, like barely, but you can see blue. Yeah, you can. All right, Gucci. So what we're looking at right now is my little chart or graph or table, whichever way you want to put it, that I created in order to really break this down, right? So right now, our current price of SPY is $4.98, right? Current price of SPY is $4.98. So if we, and this is currently at the money, right? So at the money is another way of saying what is the current price, right? So what is the price right now? So you can just say ATM, or I like to think of it like, hey, when I buy when I buy an option contract, I'm trying to get to the ATM, right? I'm trying to get to at the money because let's say if we buy a call contract for 501. This is out the money for me in my house. Now, there's different schools of thought for being able to think of, okay, what's OTM, what's ITM, what's ATM, right? But for me in my house, and I think this makes sense, y'all let me know, what do you use for OTM? But for me in my house, let me know in the comments. I use 2 or more levels. So what does that mean? So the current price of SPY and the S&P 500, top 500 companies within the New York Stock Exchange, current price is $4.98, right? $4.99, that's still at the money. That's one level, right? So that's still at the money. It's super close. And these are going to be like low key your high IV option contracts. So option contracts that are a little bit more expensive are ITM. 500, still ITM, right? Still super close to SPY, right? Now we're buying a 501. This is OTM, right? So what we want is to be able to take our OTM and get to the ATM, right? Who doesn't like to go to the ATM? So in order for the OTM to get to the ATM, we have to make sure that number one, the market agree with us. So if we're bearish on the market, if we're bullish on the market, we want to make sure that the market agrees with us because we just bought a 501. We need this 498 to turn to 501. But every level that it goes up, that's how much money that we're making, right? So if it goes from 498 to 499, damn, we just made some money, right? Goes from 499 to 500, yo, we're making more money. But when we start printing money, right, like we're at the ATM, right, is when it goes from 498 to 501, and it is now in the money or it's at the money, right, because that we're at the current price. And the inverse, and the same works for the inverse, right? Y'all can see that, right? Yeah, green works, but it's like barely working. I just want to prove a point. All right. So we buy a put contract for $4.95. Yeah, I'm not even going to keep it that way because honestly, I can barely see it. For $4.95, right? That $4.95 is out the money. We are bearish on the market. Oh, the ATM. Yeah, that's how I learned it. In order to like understand what ATM and OTM and ITM means, right? Because I was like, yo, this is too much when I first learned options. So I was like, all right, I got to be able to think of a joke. I got to be able to just to make this a little bit more relatable, right? Because like everybody wants to go to the ATM, right? Like who doesn't like to go to the ATM? So when we're OTM, our job is to get to the ATM, right? Because we want to print money. Good job. Thank you, GD. I appreciate that. All right. 495. So what is our job? Is we're bearish on the market, right? So we want that 498 to be able to drop down to 495, right? 497, we're making money, but not that much. 496, yo, I'm jumping, I'm clapping now. But 495, that's when we really start printing money. All right. So I think this gives us a really comprehensive basis in order for us to really start building out our algo, right? And what is an algorithm? Just to make sure that we really understand it. An algo is an automated decision-making system for buying and selling options based on the rules that we design. And we're going to design the rules. So right now we're on step 2. Step 1, we've already identified the asset. We're going to be using SPY, the S&P 500. Step 2 is going to be building out our entry, right? So how does the trade and the signals trigger? So what I'm going to be using is, and again, there's a lot of different schools of thought debated to do this, right? Shit, I can use ChatGPT. I can go to Claude Code. I can go to TradingView. I can use another cool way that I'm going to be bringing here to y'all is Google Scholars. I don't know if y'all knew about this, but again, you just Google, right? Google Scholars, and then you're going to go to Google Scholars, and then all you're going to do is just say, hey, momentum, or let's just do breakout option strategies, right? And what this is these are people with PhDs. These are people that has decades of experience on top of me, right? So like I'm dwarfed when it comes to these individuals, right? And they write different research papers on being able to understand different breakout strategies, momentum strategies, right? Whatever option type of strategy you have, they can create it here. So sometimes what I'll do is I'll come here and I was like, all right, let me see if I can find one that can be used as a basis of it. So I'll click on it. I'm not going to lie. It is a little bit of a read. It is a little bit of a challenging read. I'm not going to hold you. But if you can get past that and use AI to be able to help you digest this, you can really have a edge type strategy. I'm talking about strategy that can really start printing you money. But what we're going to be doing, and one day I'm going to make a video on being able to create one off of Google Scholars, but I want to keep it a little bit more simple because what we're going to be using is TradingView. I talked about TradingView before. TradingView is what I like to use when I want to quickly look at a chart of any underlying asset. I'm looking at the 1-minute chart, right? So what I want to do is click on indicators. Y'all can see this, right? Let me just make sure. So if I click on indicators, you can see that. Beautiful. And then what I'm going to type, let's see. I had trend. I already have gap. What type of strategy do y'all want to see made? SPY. Let's be a little bit on the nose, right? So let's say super. I'm just gonna put super. Now let's see what pops up. Let me just zoom that in so you can really see. All right, so what I just put is super to be able to search, right? And I'm going to go to the community. Now, who is everybody in the community? These are different traders, retail, institutional, algo traders, quant traders, right? Different traders that'll make different strategies that work for them. And what we can do is take it and being able to adjust it such that it works for us. So sometimes I like to come here and get an entry, right? And just adjust it for 0 DTE strategies. So that's what I'm going to do. I just put super and let's see what comes up. We have super trend AI, super trend strategy, super trend order book, fair value gain, super trend explorer and screener, super trend moving average, super trend 5, super pivots. Oh, that okay. Let's try this out. Super pivots. I don't know. This just caught my eye. Y'all saw what I did, and then oh shit, I should have put okay. So I'm gonna put super, right, and then super pivots. So you see where it says source code, these brackets here. Excuse me. Can I suggest pullback volatility? Oh yeah, I can do pullback. Pullback violating the current ATR. Can I suggest pullback? So let's put pullback. All right, pullback. Pullback violating the ATR. So that's like a mean reversion, but ATR, but it's depending on the period. So you want, okay, hold on. Let's think about this. So GD, you said you want pullback over, okay, hold on. I want to keep that, but just, okay. I'm going to keep that in the back of my brain. So pullback violating the ATR, violating the current ATR. So pullback warning. I'm going to use that. So just give me a bit. I'm just going to take an entry, but I want to use that. And I want to show you how I want to use it. Pullback analyzer, pullback SP strategy, trend and pullback to smarter pullback and candle pattern. Okay, this is interesting. Smarter pullback plus candlestick pattern. Let me see. EMA and pullback. That's interesting. Some of them we can't get to, right? I mean, I understand. Like some of them people are trying to quote unquote sell. I mean, I would never, I say ever buy an algo. Like just create your own. I'm telling you, it is not that hard once you understand. And what we're doing it is step by step today on how to create an algo. Scalping pullback tool. No, that's 18,000. That's a little bit too saturated for me. Aggressive pullback indicator. Coil trend pullback strategy. Moving average pullback signal. Algo. What about that? Morning. Okay, here we go. Morning option pullback indicator. This is exactly probably what I wanted. Let's try this. This morning option pullback indicator. So what I'm going to do is open up source code. All right. This is the source code subject to, okay, blah, 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 blah. What is this? This is a Pine script, and Pine script is the language that TradingView uses in order to create their indicators, right? So what I'm going to do, oh, it doesn't have pre-market in here, gang. All right, so what I want to do is copy. All right, what I want to do, let me get to Cloud Code real quick. Come here, and then we're going to open up a new folder. So you saw what I did. I'm in Cursor, and in order to get into Cloud Code, I'm going to open up a project. We're going to go to our main option folder, and I'm going to put pullback or PB&J. I'm just going to put PB&J because we understand that's pullback, and we're going to put some jelly on top of it because that is our what? Our sauce. All right, I'm not going to use Cursor's AI, so I'm going to toggle this closed. So I'm going to create a new file, and until I figure out how to get it open the reason I created a new file and I'm using Python is because I need to get this little ellipsis open so I can run Claude Code. Yes, I can do it this way and just open up the terminal and just have it that way, right? But I don't like running it from the bottom. Pause. I like to be able to run it from here. So I'm going to run Claude Code. I'm going to hit X. Now, I don't like to use their default Claude Code, so I'm going to clear it. Delete this as well. Excuse me, I had to cough. I didn't want to cough in your ear. Then what we're going to get is the 4.5 Opus or Opus model. I'm going to call it Opus. It sounds like Megatron, like one of them. All right, so I'm going to get the 4.5 Opus model. And what we're going to do before we even paste in our Pine script is I want to build some bases. So what do you know about options, algo, strategies? Explain to us like we're 12 in a non-condescending or demeaning way. Because sometimes when I say that, like it gets real like condescending, like real fucking condescending, bro, or demeaning way. Ensure to talk to us like it is a professor talking to their student. All right, beautiful. I appreciate you, GD, for that recommendation. It's for first time creating a pullback strategy, honestly. So I appreciate you for that. And I'm going to show you how I'm going to use ATR. All right. An options algo strategy are systemic rule-based approaches of trading option contracts. Let me break this down. What is an option? We already talked about that. What is an algorithm? Common strategies, volatility, delta neutral strategy, a mean reversion. We have a lot of mean reversion strategies. We already have a shitload of momentum and trend following strategies. Market making, you're going to need a little bit more money for that. So I'm not bringing in market making here because I'm not going to hold you. This is one of the things that I appreciate about this, right? I'm going to be complete and honest and upfront with y'all. Market making, you're going to need a couple thousand. Like we can get away with doing it starting at $100 for these type of strategies. For market making, you're gonna need a couple thousand in order to do that. Oh no, man, I appreciate you for being part of this. Like I said, I really do hope that you're following it step by step, and this is a strategy that I'm building based off your suggestions. So like I'm interested to see how this works out. So no, I appreciate you, man. Stay tuned, and if you do have any other recommendations or anything else to point out, let me know. Why use algorithms, speed, discipline, scale, backtesting, hard parts is okay, we can get into that. All right. So what I want to do is I copied, let me just so you can see what I'm doing. I copied our morning option pullback indicator strategy, right? So I'm copying it, and then I'm going to go back to Claude Code. What I'm going to say is, all right, bet we are thinking of creating a 0 DTE SPY option algo strat based on the following. Paste it. Come on, homie. There we go. Review it and explain this Pine script to us like we're 12 so we can begin to build out our strat. Beautiful. All right, here we go. I'm looking at the ginger ale and I kind of want to drink my ginger ale, but every time I drink the ginger ale, I'm like, I'm going to get these. Okay. This is a morning pullback strategy for SPY QQQ 0 DTE options. Oh, this is already, hold on. This was already 0 DTE? Let this already be 0 DTE. Hold on. No, it wasn't. It just bullshit me. I think I said 0 DTE and it just when it said 0 DTE, whatever. All right, pre-market. I can get that data, but that's going to be kind of tough. Before market, open between 4 a.m. and 9:30. The script calculates the channel. This is the high and low prices from the pre-market trading. At market open, it watches for the price to break out from that channel. Above the high equals bullish, below it equals bearish. The pullback is the entry. Instead of chasing the breakout, it waits for the price to pull back to touch the 20 EMA. That's going to be super slow. 20 EMA is like waiting for 20 minutes to pass. And then once 20 minutes pass, I have an exponential moving average. And then once the price breaks above it or below it, that's what excuse me, that's what triggers our caller puts. But that is super slow for 0 DTE. I'm thinking that we can either drop this to like 3, 5, or 8. Like 8 being the maximum, homie. Typical, the signal logic is for a call bearish bullish signal. The prices broke above the pre-market high. The price pulled back down to touch the 20 EMA. Again, super slow. Maybe I'll do 12 is the longest I'll do. The 5 EMA stayed above the 20 EMA. The trend is intact, and we're trading in the morning section. This is super. This is like a strategy that's like kind of almost built for us because I only trade in the mornings, right? The only thing that's kind of different is this pre-market, gang. We got to figure out how we're going to do that. I mean, we can get the pre-market from theta data. So okay, hold on. Steps taken. Now remember, I'm going to have a steps taken here, but I also want our AI to be able to write every step that we took in order to build out this strategy so we can keep track of it. So I just forgot I didn't create that file. Oh, what was I saying? Oh, we can get the pre-market data from theta data, and theta data is where I get my tick by tick data from. I just found it to be a little bit more comprehensive than using Polygon, or right now it's called Massive, or any other provider out there, right? They're a little bit more comprehensive, and a little bit more budget friendly too, with regards to what we need. All right, so this is for the bullish, the opposite conditions broke. For the puts or bearish risk, this I'm going to change. This we're going to change. 1 trade per day. 1 trade per option day. This is I like. Force close by 359. No, because we're going to have a max hold time. All right. All right. Now let's focus on the entry right now. We are going to be trading 0 DTE. So in turn, we would need a lot faster periods. Let's talk about being able to update the periods and also what is used as confirmation before we enter the trade. We are going to be using 1 minute time frame and thinking that the periods can be anywhere between 2 and 12, 12 being the max period. Let's discuss focusing on the entry for now. I suck it out, y'all. I grabbed the ginger ale. Need to burp more, but I grabbed the ginger ale. It's all right. I just grabbed more ginger ale. I just want to let you know if you have to mute, y'all know why. All right, good thinking for zero DTEs. You need faster signals since time decay is brutal and time decay is measured by theta. Did we talk about the Greeks? All right, I'm going to get to the Greeks, but let's just keep going. But I'm going to get to the Greeks. That sounds like a movie. Get them to the Greeks. Isn't that a movie? Okay, let's stay focused. All right, good entry confirmation from the script. The entry triggers when all of these are simultaneous. The price touches the 20 EMA is less than the low for calls. EMA separation. Okay, I have a separation I want to use because this is a 15 gap. I like to keep my gaps under 10. Because this 15 gap, I haven't tested it yet, right? I like to keep my gaps under 10 if we're going to have a crossover. And this looks like this is a crossover. For the last 4 candles, that's fine, but I want to keep the gap under 10. The price is within the valid range, not too far above from the pre-market high or low, and then the time frame is inside the morning session. The problem for zero DTE is 20 EMA on a 20-minute chart means 20 minutes. No shit. The burping has started. My fault. That's slow. By the time you get the confirmation, you have already missed the move, or theta has eaten your premium. Short EMA and then the zero DTE range track the immediate movement. Medium EMA. Okay, hold on. The entry confirmation, what actually matters. Must have is the price touches the medium EMA. The short is greater than the medium EMA, and the candle shows rejection. Close back to the EMA after touching it. The must-haves is a volume spike, the tick.us confirmation, and then the EMA separation. How aggressive are we going to start? Let's start super aggressive. Then we can pull back. That's funny. Slash tighten, depending on the backtest results. So thinking we're going to start with 2-6, and that 2-6 is a 4 gap. And you understand what I mean by gap, right? Hold on. Let's come here real quick. So if we have an EMA 3-5, we have EMA 3-5. Our gap equal, not GPA. That's funny. Our gap equals 2 minutes, right? I don't like to be. Sometimes this 2-minute gap works, right? But what I found, especially when it comes to zero DTE options, the sweet spot for gaps equals. And this is for me in my house, right? Everybody has different schools of thought for this, but for me in my house, the sweet spot for me when it comes to gaps is greater than, no, less than or equal to 10 gaps. Meaning I like to use 212, 313, sometimes 3-8 really slides. It really does as well. Sometimes 2-6, right? And that 2-6 is here. So what we're going to start with is 2-6, and we're going to see how well this gap works. Does that make sense? So when I say gap, that's what I mean. 2-6. All right, 2. The rejection candle required. The script has the bar close and the low on the opposite side of the EMA. Do you want to require this candle close back above the EMA before entering, or just enter on the touch itself? Let's have it where we can toggle this on and off. Let's start with it on and gauge results. 3. pre-market channel, still use it as a filter or just rely on the EMA alignment? I'm not going to hold you. We don't have pre-market data now, so would this hinder us just relying on the EMA alignment? All right, beautiful. All right, so perfect approach. Let's start aggressive and then tighten based off the results. Excuse me. Ultra fast movement, pullback level, rejection candle, toggleable, must close back above or below the EMA. Pre-market channel disabled, EMA alignment for now. The entry logic without the pre-market data. Yes, without the pre-market data, you can rely purely on the EMA alignment. Here's what it'll look like. The call is the EMA 2 is greater than the EMA 6. We have an upward trend, so we're bullish on the market. We think the market is going to go up. The price dips down and then touches the EMA 6. The candle closes back above the EMA 6. The rejection is confirmed, and then we enter a call. So all this must happen in order for us to enter a call. Now you notice, what's one thing that you notice that I think we should have, and depending on how the back test goes, I may add a volume confirmation, right? So this is a trend and a momentum kind of momentum slash pullback confirmation or direction confirmation, right? But I also maybe want to have a volume confirmation. But these are one of these causation and correlation type of things, right? So what do I mean by that? Sometimes it is not correlated that having high volume means a good trade, but if it's could help us being able to strengthen the signal, why not use it? But we're going to start here, and then if needed, being able to add a volume confirmation. Now the volume confirmation is going to be purely volume based. It's not going to using VWAP or VMA or anything like that. It's going to be strictly volume based, right? Not using any of those indicators. And put is the opposite. Must happen. What we lose without pre-market, no breakout direction, biased at open, no distance filter. Check could get chopped in the ranging sideways market. What we replace it with, you'll need something to establish the initial trend. Option is the first X candles, wait for the 5 to 10 minutes, establish a high or low of the range as your channel. The previous day close, bullish bias below bearish, pure EMA, just trust the 2-6 alignment from the start, or an opening range breakout. Wait from 9:30 to 9:35 range to break, then look for pullbacks. I'm thinking if we can make like if we can create something using the previous day and then maybe the first 5 to 10 minutes in order to confirm it or to and add on to it, I think I like that. Instead of this pure EMA or the opening range. I mean, sometimes that could be a little bit of issues having an ORB, opening range breakout. What we want to do is the following. Take 1 and 2. Shit, is it gonna work? Damn. Don't freeze. I think it did the wrong thing because I know no way in hell that's 300. And combine in a way that would work as a proxy for the pre-market data. Let's think about this before we proceed. Beautiful stuff. Beautiful stuff. And if y'all do have any questions while we are working on this, please let me know. What we're working on right now is building out our entries for our pullback strategy. All right, smart. Let me think this through and how to combine the pre-market proxies. The two components is the opening range, the first 5 to 10 minutes. This gives us a fresh channel for the day. It captures the initial volatility and direction, similar to the pre-market high and low, but built from the live data. And then the previous day close gives us the bias filter. If the price was above the previous close, it favors calls. If the price was below it, it favors puts. How it can work together The previous close was 450, and the opening range from 930 to 935 was 450, 150, and 450, 458. Excuse me, 450.80. Both previous closes, so bullish bias confirmed. Scenario A, align bullish. The opening range forms above the previous close. Only take call trades. Wait for the pullback to the 6 EMA. Scenario B, opening range forms a below the previous close. Only take put signals and then wait for the pullback to the 6 EMA. No, I'm not straddling. Nope. Mixed and straddle. The opening range contains previous closes, high and previous low. Choppy indecision. Maybe skip the first 15 minutes or require stronger EMA separation. Discussion points. The opening range. I'm thinking that the opening range like 10 minutes. I think that's fair. One, the OR or opening range is going to be not operating room. That's not funny. I'm sorry. Is going to be 10 minutes to start. 2, strict on alignment. Enter the opening range must be above. The entire opening range must be above / below the previous close loose. Just needs the current price above. We want it to be a bit more loose / aggressive to start. Then again, we can tighten based on back test results. 3, what do we do with mixed signals? I'm thinking that we skip it. I'm not going to hold you because skip the trading until clear direction. We are thinking that we should skip trading until clear direction and not force it. Trade both directions, but not force it. And let's gauge how well we perform. Does that make sense? All right, let's tie this together now before we continue to build out this strat. All right, beautiful, man. We are making hella progress. We're making dumb progress, y'all. What I want to do, I want to come here. All right, let's look at it. Perfect. Let's tie this together. The bias, establish the bias from 930 to 940. We're going to get our OR or opening range to build today's channel. And then the previous close is going to be used as a reference for a directional bias filter. And then phase 2, a bullish bias, only allow calls. Current price is greater than the previous close. Then the bearish bias, only puts are allowed. The current price is less than the previous close. No bias, skip trading. The opening range straddles the previous close, the high above, low below. Phase 3 is to enter the trade from 940 onward. All right, beautiful. Parameters that's toggleable is the opening range, rejection, and then the bias filter. Okay, we got a little flow diagram. So from 930, we're going to build our opening range. And then from 940, we have our opening range. So what is our opening range doing? And letting us know if it's going to be bullish or bearish. Bullish is we think the market is going to go up. Bearish is we think the market is going to go down. Got it? Beautiful. Then if there's no bias, if we're seeing choppy conditions, if we're seeing that it's straddling both the high above or the low below, right, we're not going to trade at all because I don't want us to get stuck in the chop or stuck in the churn, as some would say. All right, so from 930, I'm going to copy this because I really like this. So from 930 to 940, we're going to build our OR or opening range. Then if it straddles it, we're in no trade. But if the price goes greater, we have calls only. If the price goes less, we have puts only. And then we wait for the EMA 6 to pull back plus rejection. And then we're going to enter a call or put. Questions before, does the bias stay fixed all day, or do we recheck periodically? All right, hold on. what do I want? I want to copy this because this is like super dope, fam. Because this is how I'm going to paste this here. Let's see if it fits, if it stays. If it does stay, fam. Look, we got our flow chart and it kind of stays, right? Not really, but kind of. I'll fix it later, but I was just kind of excited about that. It's the little stuff, man. It's the little stuff. All right. One. So we are having the session, the trading session from 9:30 till 11. Let's say 11:28. Now let's just do 11:38 a.m. EST. So periodically, within that session, if the first signal outside of the OR opening range is choppy, we'll skip, but keep rescanning until we're done trading for the day, which is at 11:38 a.m. Right? Oh no, only one trade per day. So I'm glad I brought this up too. We are only going. Oh, you know what? What I wanted to try too. I want to try this smart trade logic out, right? Because this kind of worked for another one of our algos, and I wanted to try it here. All right, we're going to do the following. If trade 1 wins, that unlocks trade 2. But trade 1 must, oh shit, my fault. Okay, no, never mind. You're looking at the right thing. I'm just looking at something delayed. Okay, trade 1 must exit via one of our TP. Take profit. When I say TP, take profit levels and not via SL, stop loss, or max hold time. These will be shared with you later. So if trade 1 exits via TP, we know that the signal was strong, and then it allows for another trade for the day. But max trade is 2, but in order to get the second one, it must win the first one convincingly. Whatever, you'll get it. Convincing fly. Convincingly. All right, bet. And then 3. I already have the cutoff. So let me just put it here. Max hold time is going to be 4 minutes. Right. And follow me. Trust me, because with 0 DTE options, with these option contracts that expire the same day, you do not want to go past. You do not want to go past 8 minutes for me. Right. Like if I could get this down to 2 minutes, 1 minute, 90 seconds, that's a lot more stress, a lot less stress. Because yes, we want to be able to automate our trading. Yes, we want to be able to take our emotions out. Yes, we want to be able to make sure that the boss can trade for us, right? But you're still going to be watching this, right? So you still have to stomach if it so happens to make a bad move, if it so happens to be able to touch support levels, right? You like, damn, I hope it makes it back, right? So that's why I don't go past 4 minutes. Really, I don't go past 3, but right now I'm going to start at 4. All right, so max hold time is going to be 4 minutes. SL or stop loss. So stop loss lets us know all of our trades start at $100. I want a stop loss to be 15%. So that lets me know if it starts at $100, if the trade goes to $85, exit the position. Do not try to wait for a rescue. Exit the position. Stop loss is going to be 15%. And TP, let's just bring our TP levels now. TP1 is going to be 28.4%. TP2 is going to be 20.5%. And then TP3 is going to be, let's do 14.8%. We exit the full position, no scaling out, but full exit if any of these conditions are met. We are aiming for the higher TP, of course, but listen, we are going to exit if TP3 hits, or max hold time, we just exit at market. Got it? All right, beautiful. We're starting to build this out. So the next part, what we're going to be doing, can you quickly explain how TP works? Yes. So TP is going to be take profit. So let's say, for example, our position, let me come here while that's outputting. All right, let's come here. Let me enter. Okay, beautiful. So let's say if our position starts at $100, right? Not $1,000, $100. And we have TP levels of 10%. So TP1 is going to be 10%. If I could type 10%. And let's just say TP2 is going to be 20%. So what this lets us know is that if the position were to get to $110, that's TP1, right? 10%, or $120, right? That's TP2, 20%. We exit the position, right? So TP basically means what return do we want in order for us to exit the position, right? I like to use multiple take profits. Like if you could just use one take profit, I'm not gonna lie, because some people just like to use one take profit and that's it. But I like to have a tiered take profit system, right? Maybe TP2 isn't going to hit this time. Maybe it's going to be TP1, right? Or maybe TP2 or TP3 isn't going to hit. Maybe it's going to be TP3, right? At 30%, right? So what this lets me know, 130, TP3, 30%. Let me just check my math, but like I'm almost certain that it's right, but I'm not afraid to check my math. That's yeah. And then 30, 30, yeah, so I'm right. All right. So take profit just lets us know what is the return that we want in order for us to be able to exit the position. I like to use tiered take profits because it allows the strategy to have multiple ways to exit, right? It's not just relying on, damn, I had to get to 30%, right? It can get to 20%, it can get to 18%. And you're also going to see that there's different levels with inside here, right? So let's say, for example, if this position shoots up to 160, it's still going to be TP3, right? But we gave it the room in order to get to that 160% return, right? So take profit, just in layman's terms, allows us to be able to know what do we want in exchange in order to exit the position. Does that make sense, GD? If you want, I can break it down a little bit more. Just let me know. But I want to come back here to the output. All right, got it. Let me summarize and confirm the understanding. So we're starting at 9:30. We are checking. We are ending at 11:38. Bias check is going to be the continuous until clear signals. But isn't the price always going to hit the first target? I apologize in advance as I'm not sure if I understand. Not always, right? And that's the thing about our take profit levels, right? I don't know what's going to happen. All right. There's going to be instances where it's going to hit the third level, right? Or second level. There's going to be instances where it hits the first level. We don't know. What we want to do is to be able to create as many redundancies as possible, right? I don't know if that's the right word, but that's the word that's coming to me, right? I want to create many levels of support or many levels of resistance, right? That allows the strategy to get out and not just wait for or just have one clear direction. Because remember, what is an algorithm? An algorithm is being able to have an automated decision-making system, right? Decision-making, right? So if I only give it one way to be able to exit, then it's only looking for 10%, right? But if I give it multiple, oh shit. If I give it multiple ways to exit, then maybe it can exit off the first one. Maybe it can exit off the second one. And I'm not trying to be a hard ass, or I'm not trying to be opaque, right, with my responses. But what I'm trying to let you know is that I don't know where the price is going to go, and we're not supposed to know, right? Because I'm not a fortune teller. Not yet. I don't think so. Can you show graphically on a chart? Yes, but I'll have to go get another back test. Yeah, hold on. Let me show you another back test. Let me show you a back test. Let me show you this one. Yeah, early warm is not bad. So this is another strategy that we have. This strategy is a 0 DTE SPY strategy. This is a momentum-based strategy, so this is not pullback, right? So this is a momentum-based strategy. So what it does, it's looking at the 1 minute chart from 9:30 to 11:12 a.m. and it's looking to find a candle that's 2 times bigger than the last 5 candles, right? That's going to let us know that, hey, there's momentum or there's something coming along, right? And this one, we have our volume confirmation. We make sure that the volume isn't too crazy. We want controlled moves, not chaos. If the price is going up, we buy a call. If the price is going down, we buy a put. We only hold it for a maximum of 5 minutes. And you see here, I have 3 take profit levels, right? Let me show you. Our take profit levels here is 28%, 21%, and 15%. Hold on. Let me see if this can open up. Oh, you know, a matter of fact, I do have a graph I can show you, like a super cool graph. All right, beautiful. I don't know if this is going to have take profit, though. Hold on. Let me see. All right, this is just going to have the final trades. I thought this was going to be, like, really cool. All right, hold on. Let me show you. Let me just show you the actual back test. All right, let's run the back test so you can see what I mean about, okay, we don't know when the take profit is going to happen, but when it does happen, it could be a beautiful thing, fam. All right, let's run it. I don't need Claude Code. I just needed the terminal. Now let's run our back test. So this back test, we're dropping this strategy off in 2024, and I switched up the back test here, right? So we're splitting up our back test. The first half of the back test, we're training our strategy. The last half of the back test, we're validating our strategy to see how well it works, right? So right now, we're loading our data. You have to give it a bit because it's loading 10 million rows of data, right? So it takes a bit, but as soon as it loads the data, we can go through and see what I mean by the different take profit levels and what happens here. So just give me a moment, and I'm going to be showing. So, okay, beautiful. All right, hold on. You see here? We entered, let me just go to the first trade. All right, first trade, we started at $100, right? The maximum risk amount we put up, damn. Ah, crap. Come on, just give me one trade. Okay, hold on. It's moving. Let me just go to the middle. Okay. So I'm going to say, what I'm going to say is the balance. Okay, damn, it's still moving. All right, let me stop right here. I'm sorry. So the balance is at 634. Goodness gracious. Can y'all just give me one trade, bro? Give me one trade. All right. The balance right now is at 1,500. I was trying to show you the $100 one, but whatever. The balance right now is at 1,500. And then, matter of fact, let me just copy this so I don't have to worry about going back and forth. Shit, just give me one trade, bro. Holy cow. All right. Balance is at 2,000. I'm going to copy this trade. And then I'm going to come here. And then we're going to review this and actually go through it. All right, beautiful. So the balance of the account was $2,554.86, right? This is a little bit after. So I want to talk about the risk here level. That's just the position size, the portfolio size. But we're going to get to that part, right? So what happened is that this strategy, there's momentum strategy, was able to find a momentum breakout, right? And then it found a call for 544, right? So then it bought a call for with a strike price of 544. It bought it for $44.50. So we bought 11 contracts. Okay, I can stop you. I don't need you to keep going anymore. It bought 11 contracts for $489.50, right? So we subtracted that from the amount of cash we have, and then we have $2,000 left. You see our take profit levels here, right? So what our back test is automatically going to do is going to calculate what's going to be our take profit level. So we got in the position at 0.44. All right, let me know if I'm going too fast. So we got in the position at 0.445, right? We're getting out if it's TP1, 0.57. That's 28%. TP2 is going to be 0.54. That's 21%. Or TP3 is going to be 0.513. That's going to be 15%. So if any of these TPs or if any of these happen while we're in the position, then we're going to get out, right? And we have our stop loss is 0.372, 15 point. Okay, beautiful. Our stop loss is 0.372 or 16%, right? And the maximum time that we can hold this contract is just under 5 minutes or 488. I don't ask me where I get these numbers from. Sometimes I'm just pulling it out. I'm like, all right, this one sounds good. But I know I have a hard line where I don't go above. So we entered the 11 contracts at 0.445, right? At a call 544. We had a 27% chance of this contract being profitable. As soon as we entered the position, right, 1 minute later, we were able to go from 0.445 to 0.155, right? So 15%, right? So I was asking for 15.35, but I got 15.7, right? So in 1 minute, we're able to make $62. So that's why I like to use different take profit levels, right? Is because we're giving the strategy multiple ways in order to get out, right? So it's not just, oh, I got to look for the 28%. No, you can look for 28%. You can look for 21%. Shit. I got to, damn it. You can look for 15%. So no matter which percent you can look for, right? You have multiple ways to get out. I also gave you a way to get out if we lose too much money. I also gave you a way to get out if we are holding a position for too long, right? So the reason I like to use multiple take profits is because, again, I'm giving the strategy multiple ways to be able to exit. I used to just do one, but then I found out, like, over time, it's like, all right, it's a lot better for us to do two rather than just one. Does that make sense? All right, beautiful. So let's go look. Y'all see while I was talking, there's an update that just released. But before I do this update, I want to let's just go over this real quick. But isn't TP3 always going to be the first one reached, or is it based on the actual bar time before the max hold time? It's based on the latter, right? So it's based on the actual bar time before the max hold time is reached. So TP3 isn't always going to be, let me go back to it. Hold on. Oh, I'm still there. Okay. TP3 isn't always going to be the one that's reached, right? Sometimes it can be TP1. Sometimes it can be TP2, right? TP3 is just the lowest level I'm willing to accept for a return, right? So I'm always going to have that lowest level I'm willing to accept. I'm always going to have that highest level I'm willing to accept. I'm always going to have that middle, right? So TP3 isn't always going to be the one that hits. Sometimes we can have a TP2 hit. If I could find one, I will show you. Let me show you. Hold on. What? Oh, TP3, time stop, TP2. Look, so TP2, 21%, right? So in 2 minutes, we're able. So I asked for 21%, but we're able to get 23%, right? So TP1 or TP2 or the take profits are just a line that we want the strategy to be able to pass. As soon as it passed that line, so it could go from TP3 to TP2 to TP1, like in that same peak, right? So you see here, it just went from, oh damn, I think that's smart. It just hit me. Okay, beautiful, beautiful. Again, I could just I could keep going just to make sure like we really drive home the point. What was I saying? So you see here how it went from went to TP2, but it went from 11 to 23%. So it could have stopped at 14%. It could have stopped at 12%, right? But what I'm saying is that the lowest level that we're willing to accept is 15%. So I'm giving this strategy like its support and resistance levels, for lack of better words, right? And then I'm also giving it a middle level in which we're willing to accept in order for it to get out of the trade. Because our biggest thing is to get in and get out. Like, I don't want strategies to be able just to hold, and pray that it goes up. No, we want it to be strategic, that as soon as the signal triggers, we know what we're doing, we know what we're looking for, we know how to get out. Does that make sense? Beautiful. So what I'm going to do is session start, session end. If you have any other questions, let me know. Bias check to continuous check until the clear signals session. Our trade management, I love it. Must be a TP to unlock the trade too. If exit via stop loss or max hold time, you're done for the day. But max trade for the day is 2 if it's unlocked. Our take profit levels, right? So you can see it's a little different. I like to just switch it up a little bit, but they're always going to be like around these levels here. But again, sometimes I'll have 2, but I'm always going to have more than 1. Unless it's like a strategy, it's like, all right, it's like a YOLO, really, really, really YOLO. There's another one I'm going to build with y'all, but like that's after this one, where we're going to start with $50. And I'm really interested in keen how that one's going to work. But let's keep going. Max hold time is 4 minutes. So we're aiming for 28, but if not, we take 2. If not 2, we take 3. If not 3, we exit at 4. Excuse me. So we exit at the market. If stop loss at any time, we exit the position. Are these check-in sequence as time pass, or are they trailing / tiered exits? One, you'll see more on how this is done when you review the reference backtest. This will really, let me just bring in that reference backtest. And this is going to be early worm. And the reason I'm using this is because, number one, I'm not using the strategy. The strategy is just going to be the strategy, right? I know the strategy works, but I need to show it where to get the data from. And I also need to show the AI how to create the backtest. Because what I've learned, and again, I could be wrong, but I don't think so. But what I've learned is that when it comes to backtesting options, right? Backtesting.py, that doesn't work. Backtrader, that doesn't work. Algo trade, that doesn't work. Vector.bt, that doesn't work. Frequent algo, all these Python libraries, right, are good for stocks, crypto, futures, forex, bonds, right? But when it comes to options, it's a little bit different. So that's why we had to create our own option backtest file or library, if you would, right? I mean, I'm still using pandas, and pandas is the Excel for Python. I'm still using NumPy, right? NumPy is the calculator for Python, right? And this is how we plot the actual chart when it's done, right? So I'm still using some of the basics from backtesting.py, from Backtrader, from Vector BT, right? But again, I had to make it. I mean, there's a couple others that you can use in order to backtest it, but again, it's not going to allow us to start at $100, right? Most of these other ones that you can use, like Jesse, is going to want you to start like 10,000 or 1,000, right? We can't customize it like we could customize this. So this is our reference backtest that I'm going to be bringing over to Claude Code, the Opus model, so we can understand, like, okay, this is how we build the backtest. This is what we're looking for. This is how the data is supposed to be loaded, right? These are how the functions are supposed to go, right? So I'm going to bring over our reference so we can review that, so we can actually, did I paste it in yet? No. Did I paste it? No. Okay. Let's copy, and then we can paste it here. Beautiful. Review using grep and awk. Grep and awk are just different Python terminal commands in order to search the file, so the AI doesn't lose all the tokens just reading a file. So it's just a smarter way to be able to search through the file. Grep and awk Python terminal commands in order to search it. Then again, what we are taking is the functions, methods, etc. on how to build out our backtest. Nothing from the early worm strat though. Maybe the option selection and premium. Maybe. All right, review and let's discuss. All right, so what it's doing right now, it's reviewing the reference backtest in order to get an understanding on how to build out the strategy for us. I kind of want to hit this install button, but I'm going to wait because I'm going to wait until at least the backtest is built. Once the backtest is built, then I'll have it update real quick. All right. Here we go. Here we go. Oh, position sizing. Yes. Shit. I forgot to do the position sizing, but it's going to be the same thing. All right. I got a good picture. Let me summarize what's reusable, how a strategy differs. Pick the best candidate based off this. Track the entry. Check TP levels. TP2 on 3. Okay. Time based and time stop. Tiered risk based on the account size. Low win rate. Okay. I love it. The open range, what we need to establish first is the open range plus the previous close bias. The detect. Okay, hold on. All right. What we are also taking is the position sizing from early worm. And what else? I already have our way we're going to exit. So the position management. um, do you understand it before we build out this backtest? All right, like another 2 minutes or so, we're gonna have our backtest ready to go, so we can actually run it, gang. But for right now, we're just tweaking a bit. All right, beautiful. All right, yes, perfect. So less than $499 using 88%. Less from 500 to 999 using 44%. Greater than 1,000 using 22%. How contracts are calculated. Philosophy: small accounts equals aggressive. We need to grow. Can't be timid. You can't be timid with $100, right? It's $100. Medium account is balanced, 44, got some cushion, but dial back risk. Larger accounts, conservative, protect capital, compound slower, but safer. Anti marginal principle, risk more when the account is growing, winning, and risk less when the account grows. Okay, do you want to keep the same tiered structure or to adjust it? We can um keep keep it the same. It is fine. And what's this? Since you have trade unlocking, trade one must win to unlock trade two. Trade two should use the same position size as trade one or recalculate based off the updated balance after trade one. Yes. Must recalculate after the updated balance of trade one, to ensure we are always in line and make sure there is no look ahead bias, as well. Are you ready to build this backtest out? Yo, what's going on? Yo, I'm Aquan, starting a YouTube channel showing backtesting, trading bots, and crypto. How should I approach this? What I would recommend is figuring out which language you like to use, right? I like to use Python. But everybody has a different sentiment on what they're doing. So again, what I would recommend is figuring out what language you like to use, and then once you figure out what language you like to use, figure out which model you like to use, right? Everybody maybe likes to go to ChatGPT, but I'd recommend if you're coding, Anthropic is going to be your best friend. You can either use the Sonnet 4.5, you can either use the they just dropped this new model. I'm not gonna hold you, Opus 4.5. It is a great model, but again, they dropped it last week on the 24th, just before Thanksgiving. The Sonnet 4.5 model isn't bad as well. Like you can get a lot of runway out of that. But again, I'm either going to use the Opus 4.5 or Sonnet 4.5. But right now I'm using Opus 4.5 to be able to build out this back test. And then another thing, be consistent, man. I'm not going to hold you. I've only been doing this for about 6 weeks. So I'm not a pro in the game, right? But one thing that I have learned is just to be consistent. People want to see that, number one, you understand what you're doing. And doing this for crypto, I started in crypto. I used to do market making for BTC, Solana, mainly just BTC. So I understand how to do it for crypto. And like back testing for crypto is a shitload easier. It may sound harder, but it's not, because you can use backtesting, not PY, in order to backtest your ideas, and you can go from backtesting to bot. The only thing that I don't like about crypto is you can't paper trade. Like, so you better make sure your strat is ready to go as soon as you're finished with backtesting it. So that's the only thing. And just get started, my man. Like it ain't nothing to it but to do it. Right? It's not that hard, right? Like most people want to make it seem like this esoteric thing. It really isn't. It's just a matter of being consistent, getting started, and then understanding that it's okay to make mistakes and don't beat yourself up if you do. Just get back out there, right? And not every strategy is going to hit. So don't be one of those people out there that just try to make every strategy hit, because sometimes it doesn't. Every strategy doesn't hit, right? And that's okay. But again, Max Trader Dev, welcome. I do appreciate you for stopping by and checking out the channel. And maybe we could collab on something. Again, I haven't done crypto in a minute. I'm more so in the option game, but if you want to collab, we can create a strategy live together. I think that'll be dope. So just let me know. All right, so this is our strat. Oh, my fault. Are we live? Yeah, we are. No, never mind, y'all. Never mind. All right, beautiful. All right, let's proceed to create our backtest. Let's call it got to have the jelly. Got to have the jelly bt.py. And starting with 2024. Then once done, we need you to update. Again, I remember I told y'all about steps taken. Steps taken is going to be everything that we discussed, everything that we've got to this point, so we can reverse engineer this idea whenever we need to. Then I need you to update the steps taken with the discussion, how we landed on the strategy. Do not overlook anything or think any detail is too small. For example, step 1, select the asset. We chose SPY. Can tell us a bit more on SPY, and then build from there until we are at the most recent point, which is building out our backtest. All right, beautiful. Let's go ahead and auto that. What we also need to do is create our folders. So what I'm going to do is say create a folder, and I'm only going to use Cursors AI for like little admin shit, right? Anytime, my man, anytime. I got experience developing strategies and bots for my clients in Python, and PineScript is for already 3 years. I'm just not sure what to post on YouTube and stuff. Bro, anything. Like, I'm not even gonna hold you, man. Like, the people want to see like anything. So you can go from being able to, and I just built this strat from PineScript, right? So what I did is I took the PineScript, and this is where we started, right? Because I'm showing the people like how to be able to build strategies from different avenues, right? But to your question, you post anything from being able to say, all right, this is how I develop a market making strategy, or this is how I develop a mean reversion strategy, or this is how I develop a breakout strategy, right? Or this is how I use ChatGPT to develop a strategy, or this is how I use Claude Code to develop a strategy. Or you can say, and the thing about meme coins, like, you can get real kind of crazy with it too, because I'm not going to say meme coins is like, it's kind of, it has its intrinsic value, meaning that like I kind of put a little bit of stock into it, but not that much, no pun intended. But everybody has their own opinions, right, when it comes to meme coins. But I think you can get really granular with it, and just being able to show your process, right? Don't overthink it. Don't try to make it too perfect. Don't try to what is that? Analysis paralysis, right? Just get started, my man. You can just go as simple as like, oh, this is a strategy I just built yesterday, right? And being able to build it out from there, you know. I wish I can show y'all. Hold on, let me just finish this out real quick. Create a folder called backtest results. Then within that folder, create 2022, 2021, 2023, 20. I know I'm backwards, but whatever. 2024. Then within that folder, create. Oh, the backtest is done. All right, shit. V1 baseline. V1 baseline. Beautiful. So it's going to create our folders that we're going to need in order to stay organized. Let me open up a new terminal. Oh, that's what's up. We can chat a little bit more about that offline. I'll figure out how to connect with you. I would say just follow, and then I can find you from there. But if I'm not here, I'm on Twitch. If I'm not on Twitch, I'm on YouTube. But I've been finding out that YouTube has been showing me a lot of love. So I've been on YouTube a lot more, right? But yeah, Max, I would say just get started, my man. Like it ain't really, it's nothing to it but to do it. All right, now we're gonna got to have the jelly. Got to have the jelly. That's funny. Listen, I'm not an expert. I don't want to make it seem like I'm an expert. I don't want to make it seem like I'm somebody that's been doing. I've only been doing this for like 6 weeks. I've started trading. I've been trading for a while, but I started coding back in April of this year. And when I started coding, I wanted to be an AI engineer, right? So I wanted to create AI agents. It wasn't until like April, no, excuse me, it wasn't until July, August that I found algo trading. When I first started, I was like, shit, bro, cryptocurrency is where it's at. So I started market making. That was cool and everything, but I just didn't. I don't know. I didn't come to grips with it as much as I like it, as I like options. Like options, yo, this is a different beast. And I like it because I'm not gonna lie, it's a little more regulated, right? And I could bet the opposite, right? For crypto, I can't bet that it's going to go down. I always got to bet it's going to go up, right? Whereas for options, I can bet it's going to go down, and I'm okay with that. So that's why I like being able to use options. So we're running our oh shit! I got too excited. I got too excited, y'all. I got too excited. Review and let's fix. Let me look. Got to have the jelly back test as a 0 DTE. Bro, all the data is there. You're tripping. It's a 0 DTE SPY EMA pullback strategy. Thank you, GD. I appreciate you. This is the strategy that came from you. I appreciate you for giving us the idea and letting us build it from there. So this is a morning pullback strategy. We wait for the market to establish a direction in the first 10 minutes. Then we look for the price to pull back to our fast EMA and bounce. That's our entry signal. So think of it like a rubber band, almost like our mean reversion, but not really. So oh shit, you know what I forgot was the ATR. I'm gonna work that in one way or another. Just give me a second. I'm gonna work that in. Should I update? Just give me a second. I'm gonna update in a little bit. The market opens and establishes a direction. Either it's going to be bullish or bearish. The price is stretched away from the EMA and the rubber band stretches. The price snaps back to touch the EMA, the pullback, and then the price bounces off the EMA, the rubber band, and snaps back. We enter here. We ride the continuation for the original move. How it works, the bias phase. We have the bullish, the bearish, and then no signal. Okay, let me run this because I'm excited to be able to see how this is going to work out. Oh, listen, and we also have our steps taken. I told y'all. This is the document that captures the full journey of developing the got to have the jelly. That is hilarious. Got to have the jelly 0 DTE SPY option algo strategy. Every decision, discussion, and rationale and is documented here, so we can trace back how we arrived at each component. We talked about SPY, why we selected SPY, the reference back test. The reference strategy was from the Pine script, adapting to 0 DTE, the entry confirmation. I love it. All right, beautiful. So we have all that there. Now let's run you. Yo, so you don't do any I used to. I also made tools for meme coin analysis and like wallet analysis, dev analysis for my clients. Most of them. You know what? Hold on. Before I run this, let me just talk some shit real quick. Hold on. Look at this. When I say I used to be like real heavy in my meme coin bag, bro. Let me show y'all something. Because I'm just gonna show y'all like just simple. I think it's simple, but I don't know. Everybody has a different school of thought to this, right? So this is my meme coin folder or my crypto folder, and what I'm going to show you is just data streams. So nothing super crazy. These are just data streams that I created, and I think I created them here with y'all live, whatever. But these are data streams in order for us to be able to see what's going on in the crypto world, right? So what I want to do is I need to get to that folder first, and then cd run it. And then the first data stream is going to be our big moolah data stream. So this lets me see, all right, what are the big trades that are happening right now, right? It lets us see monitoring trades over 500K. And I built this on Binance. Yeah, this is straight Binance. I mean, I can share I have to go through the code to figure out because I haven't looked at this in a minute. So let me let this one propagate. And then I have another one that looks at total liquidations. All right. So who's getting rid of what and why? Oh shit, my fault. Copy, CD, run. Let's look at liquidations. And then I also have this funding one that's like super cool. All right, we have liquidations, and then I'm gonna run one more, and then I'm gonna get back to my test on what I'm doing. And then I have the funding rate. All right, copy, CD, run, and then we have funding. Clear. All right, run. All right, beautiful. So we see here that these are just 3 data streams that I used to use. I say all day, bro, all day when I was in crypto. I have a few more, but it just hasn't come up yet. So we see on this one, this is our big moolah tracker, right? So I get to see if somebody just sold a big Bitcoin. BTC is Bitcoin, ETH is Ethereum, right? One trade 92,000, one trade 3, that's 3,000, right? So this is funding. Allows us to be able to see the funding rate for across BTC, Ethereum, Solana. I think Doge is even on here too. This is live. And here we have the liquidations, right? So yes, I used to be very, very, very big on meme coins, crypto. That used to be my bag, but I found options. That's not hard to make even on Python since you connect to the RPC and then read the data straight from the blockchain using the Soldier library. Yes, but I'm giving you ideas. So they're great tools, but most of them are useful. Also look into the long short ratio per ticket from Exchange API, and then the deep order book analysis for the large order shells for some insight. No, I agree, but again, I'm not in that world right now. I agree with you. These are like super easy to make. This is not that hard to be able to get to. But again, I just wanted to show you just a little bit of ideas on like what type of videos you can make. Like making a video on funding, liquidation, or even what you're saying here, this long short ratio per ticket. That's one video. The next video could be the deep order book analysis, right? That's another video. So like you have a deep bag when it comes to crypto, and like everybody's looking for that. I'm not going to hold you, and especially if you give the people regulation. I just got tired of fucking worrying about rugs. I got tired of like making sure. I just got tired of rugs. Just to be honest, just to keep it just a buck with you. And I like regulated markets. It's not to say that you can't lose your ass on options, right? Because you can. But the reason I like it is because it's a lot more regulated, and I can have a lot more. I can have different fun here, right? Like I can bet the market is going to go down and still make a lot of money. I can bet the market is going to go up and still make money, right? So that's primarily a bit of reasons why I switched from crypto to options. So right now our back test is running on 2024. This is not doing it. It's at 114 right now, but I can't really tell what's going on. This back test could be a shitload better. My fault if I can't tell what's going on. I know you can't. Yeah, this could be better. That's what I'm saying. Don't overthink it. Really, do not overthink it, my man. Just get out there. You're even to the point you don't have to show your face, right? So don't worry about, oh, I have to get a webcam, or I have to make sure this is good or that is good. The only thing that is annoying is setting up Streamlabs or OBS. I would recommend to start with Streamlabs. Serious traders use only BTC and Ethereum for trading. They're regulated in some sort due to but you got to be in the ETF. Like the actual crypto itself is not. The ETF is. That's different, right? But yes, I hear you, but I hear you, right? And maybe someday I'll get back over to the meme coin world, but for right now, options has been sweet. But yes, I hear you. But those are ETFs, exchange traded funds. Yes, those parts are going to be regulated, but the underlying asset himself, I still think is not regulated. But yeah, man, don't overthink this, bro. Like, just open it up. Oh, Streamlabs. Start with Streamlabs. Don't waste your time with OBS. Start with Streamlabs. You don't have to pay for it. Start with Streamlabs. Figure out Streamlabs. Figure out how to make it work for you. Okay, this I don't know. So it's at $68 right now, and it's in April. I don't know if this is good or if this is bad, right? It's at $94. I mean, it's surviving a bit, but from what I'm seeing, number one, that it's giving back too much money, but I really can't tell what's happening because the output of it is kind of trash. I mean, it's good, but it could be better. $81. I mean, the strategy is surviving, but it's not thriving. 97, 105, 109, 100, 89. That's what I'm saying. It's surviving and it's not thriving. So what this is letting me know that, I mean, the strategy has good bones, but I need to tune it a little bit such that it's able to work for us. See, it just went from 110 to $92, 85. All right. This has good bones. I'm not gonna hold you, but we pause. But I need to adjust it a bit such that it works for us. What's your language of choice? Do you use Python as well, Max? And what's your model of choice for AI model? Or do you, I mean, C++ is kind of like, I get it. Unless you're doing like 100 trades a second or a minute, it's kind of OD. But I get it. Most people want to. I try. I still have to learn C++. All right, what's going on? Did you spaz? It's at $27, y'all. Like it's barely 23. I don't know, man. The strategy is making it, but it's like barely getting there. Okay, what I'm gonna do, I have a couple of ideas already. So I'm just gonna install our update because that was pissing me off. So let me just install that. And then I'm going to update a few. Appreciate your advice, man. YouTubers in backtesting / trading niche there are talking nonsense a lot on without proper knowledge of the topic. I mean, I agree, but like I'm still not. I'm still becoming a lot more versed with regards to like being able to code, right? But like this trading shit, that's easy. Like I've been doing that for a while. Like as anybody, like almost everybody's been a retail trader, right? But it's just a matter of being able to connect the dots, you know. Oh, what I want to say, I wanted to update a couple things. Oh, let's go get 4.5 because I did have to install a new update. And one thing, I feel like I'm an OG with Cursor, bro, because I've been with Cursor. I don't know if y'all know this, but I've been with Cursor. Like they used to have this fast lane, slow lane, right? Where here you wouldn't have to pay for the different models. You just have to wait for like fast lane, slow lane. That's how long I've been with them. What do I want to do? I want to update a few things on the back test. All right, let's look. Excuse me. 0DT. Okay. Entries. No, I don't think that needs to change. Wait, what the? Okay, I was about to say. Let me delete you so we don't have any issues. Okay. Bias window from 9:40 to 11:38. Okay. 2 and 6. I think this is a problem. Let me try. Okay, I'm gonna try different EMA periods. Now remember we talked about the gap before. This is a 4 gap, and I kind of like to work it up to 12. All right, let me try. Okay, what I'm going to start with is this EMA, right? The exponential moving average. Right now it has a gap of 4. I want to increase it to see what the gap of 12, gap of 10 would do. So I'm going to do EMA 2 to keep our fast EMA at 2, and then update the medium EMA, just double it and go to 12 so I can have a 10 gap. And then let's gauge the performance from there. And I'm going to keep it, maybe I'm going to increase this to like 15. So I want to increase this to 12, increase to 15, drop you to 40, increase this to 15. All right, so what did I do? I updated the medium. Okay, we updated the medium period to 12 from 6. Updated the delta min from 0.12 to 0.15, and updated the premium min from, oh shit, I was supposed to drop that, my fault, 0.12 to 0.15. I was supposed to drop this down. We already did this, just giving you a heads up. Running the back test now. All right, I think this may be a little bit better. We updated the delta min to 0. All right, beautiful. Copy, save. All right. I love it. Let's run it. Let's run it. All right, beautiful. I use Python and PineScript most of the time. HFT is not, high frequency trading is not viable unless you have a VIP tier on exchanges to lower commission. I use, oh, you use machine learning as well, LSTM model, but it's stuff for overfitting. So I just focus on the real data like open interest, liquidation, order books, CME gaps to find the edge. Okay. That's what's up. I'd recommend, oh shit. Our back test is running. Okay, hold on, Max. Give me 1 second. I want to answer you. Give me 1 second. Yo, this loaded fast. All right. Are we seeing edge though? Like, are we making good moves though? All right, let me let this run, and then we're going to gauge it after, I don't know, January, to see how well maybe I should just do just the one trade. I think this whole second trade thing is like messing it up, right? Let me just give it the one trade, right? Because I think this second trade thing is messing it up. Okay. Or I'm just going to go back. I don't know. Bro, this is kind of crazy. But okay. Probability of profit, POP models, right? I would recommend looking into that because everybody wants to predict the price, but sometimes being able to predict if the underlying trade is going to be profitable or not would definitely make sense for what you're doing. Have you ever done market making? Yeah. I think I need to go to this one trades game. All right, let's wait for a bit. Let me see. Enter trade 2, exit. I don't know. This is not like that $62 after almost 50, 60 days of trading. Are you planning to do one-on-one calls or providing backtesting services in the future? I don't know, bro. I'm not gonna hold you. I don't know. Like right now, I want this to be like open source, for lack of better words, right? So I show you all step by step on what I do, how I do it, and like what my rationale is in order to get there. So maybe, but like I'm really not trying to get to the point where I'm charging people for this, right? Because it's already a pain in the ass to be able to learn coding, then to learn trading on top of that. I think it's a pain in the ass. So that's why I kind of want to make this open source where like, all right, we all get successful together, you know. But to your point, I don't know if I'm going to do this whole one-on-one or providing um backtesting services in the future. That's an interesting one. Maybe that one. But the one-on-one calls, I don't know. I rather let's have like we're doing right now. Let's have an open conversation, right? So I think if it's going to help you out, but it's also going to help others out that want to be able to get into the game. Because what you're doing, I'm not going to hold you. It's a little bit harder for crypto. I think options are a lot easier, but options sometimes are scarier for people. But once you get over the whole notion of what is an option, what is a call, what is a put, what are bears, what are bulls, right? Then becomes a lot easier to be able to build out a strat for a particular. Okay, are we done? Are you tapped? Okay, you know what I'm gonna do? I'm gonna remove. Okay, first, let's do this. Let's make the whole second trade logic toggleable and turn it off for now. And only one max trade per day, so we can gauge how well the strat works without all the extra bells and whistles. Whistles. Run it. And it took me almost like 2 hours, not even 2 hours, because I think I was talking through most of it. But like normally it'll take me like maybe, I don't know, I guess to a point. I made an HFT algorithm for a hedge fund, but they had zero commission on the buy bid, and the only reason why it was profitable. Wait, hold on. I hope you got paid in points, or I hope you got paid off the back end. I hope you got like 8 off that. So how are you with planning to monetize your venture? Consistency. Consistency, my friend. Right now I've been seeing a lot of traction lately, but because that's been like being consistent, right? But like honestly, um, I really want to be able to make more off of trading than monetizing. If I can monetize, that's great, but the aim is to be able to make more off of trading than monetizing. But if we can monetize, I mean, hey, well, YouTube, I'm here. But if I can make more of trading, that's the aim, right? So that's why my goal is to be able to build a strategy every single day. Even if I'm not streaming, right? I'm still building strategies. I'm still getting better. Like I'm still like sharpening the edges, right? To be able to make sure that we're Gucci. So by the time like I'm coming here with y'all, like I'm ready to go. I'm not gonna hold you. There's some days that I mess up. There are some days that I clearly could do better, right? But what I've noticed is that don't be afraid of those moments, right? Don't shy away from it because see, that's what the fuck I'm talking about, bro. Like I knew the strategy hits, but it's just this whole trade. Okay, I still think it's doing it. It's at 153 now. 116, 125, 133, 110. Yeah, see, I know the strategy hits. So I appreciate you, GD, for like being able to give us a basis of it because I know it's good, but I just needed to like take out like all those extra shit I was doing. So let's see. Let's let it run. I'm gonna let this run now, and it should work well for us. You know. So let's try it out. Have you started your channel yet? Have you started a channel yet? And if you have, you can don't be afraid to share it here. Well, you have a lot of cool people here. I'm not gonna hold you. Like a lot of cool, dope people that I've just been meeting, like in this community. So 144. So we're at 140, 140. Oh shit, 113, and it's February 7th. So we got out of January. We're just at 144. Let's see, 122. Let's see how the strategy survives. 106. I don't know. Yeah, I got paid, of course, but most of my work I get from clients, and I just use some insights from them. But most of my money I made from clients' work, anyways. Well, that's what's up. So you're okay. So it sounds like you create. How do you, okay? So clients find you when they want to be able to create algos, whether it's hedge funds, money makers, or retail investors, right? So it sounds like you work with institutional investors. That's what's up. Like if I were you, I would just like triple down with them, especially if you're creating algos that work for them. Like they're gonna want to come back to you, right? And they also talk to their friends. And don't be afraid to go to boutique investors as well, right? But to your point, no, that is what's up though. Like that's really what's up. How did you get started? How long did it take you to understand, or like really being able to understand coding? The strategy's at $35. Y'all, it's about to blow up. There's something I'm not seeing here. There's something I'm not seeing here, y'all. And the strategy, I don't know. Hmm. There's something I'm not seeing. Maybe what we should do is just go ahead and bring in that volume confirmation now. Because what I'm seeing, or matter of fact, I have an idea, like really for you. $23, bruh. All right. The strategy's at $18. I don't even think what I want to do. All right, bet. All right, we have a couple things that we need to update. I'm gonna drop our entry. No, hold on. Before I even do that, I think it has something to do with our max hold time. I think because I'm under the mindset if the move doesn't move within 2 minutes, then clear it. Yeah, I'm just discovering new ways to find more potential clients. Most of the clients are retail traders who want to backtest their strategies and don't know how to code. Rarely it's hedge funds. Bro, like what? People are paying you to backtest? That's crazy. That's like mind boggling if you actually think about it. Like backtesting is the most easiest part. So do what you use backtesting.py, backtrader, Algo trade, to be able to backtest their strategy. Then you walk it forward. I would assume. Then you do what's that other shit called? Yeah. So I'm assuming you're just gonna like backtesting with whatever Python strategy, or do you create your own? That would be interesting. But that's what's up. I didn't even know that was market. I mean, I kind of did, but I didn't. People paying you to backtest. Max hold time, let's drop to 2 minutes. And stop loss, let's go to 12, 0.12. And then, all right, the delta min, let's go to 0.15. I should have stayed there. And then delta max, let's go to 0.40 and keep everything else the same. Also, we want it when we stop the back test early, that it still provides the CSV and text files with the parms so we can properly review it. Make sense? Beautiful. Let's get this done. Problem is that retail traders lose their interest because if their strategy doesn't work, they just quit. Yeah, I mean, that's one thing that you kind of really have to get over. Like you have to know that not every strategy is going to hit. You have to know that like sometimes things fizz out, sometimes things lose their edge, right? So you have to like consistently be trading, consistently be creating different strategies. I think you know how there's ABC. If you ever seen Glengarry Glen Ross, right? Always be closing. I think we have to have like an ABB, always be building, right? Because yes, you can have one strategy. Like I have this one bot, Momo bot. When I say that is my favorite bot of them all, I also have an HFT one, but Momo is my favorite one, right? And I'm that's I say that to say is that like I didn't get stuck there. Like I've created 10 more bots since Momo, right? I could have been just complacent and just said, okay, you know what, at the end of the day, I'm just going to stick with Momo. But no, um, Momo's been doing us good. Not going to hold you. But yeah, no, that's the thing about retail traders, man. Yeah, they get a little bit, once they see um, some success, yes, it goes their way. But sometimes I kind of almost hope for them not to see success at first, right? Because I want to see how are you going to respond, right? How are you going to respond when adversity hits you? How are you going to respond when you're down a couple hundred, when you're down a couple of dollars, not $100, because we started with $100 here. How are you going to respond when you're down a couple, right? Like, are you going to let your algo do what it does, right? Or are you going to let your emotion step in, right? So this algo, I'm not going to have it has legs, but I need to be able to optimize. And y'all seeing what optimization here is live. Optimization is being able to tune some of the parameters. Yes, I can use bt.optimize. I can use optuna. I can use the different Python libraries, but I like to go through them manually so we can see, okay, I just changed the parameter, the delta parameter. What's the impact on that? I've been doing this for almost 2+ years, coding for 5+ years already, and also got clients who are also community owners and they want tools for trading insights for their audience. Oh, bro, that's a bot. I'm telling you, we might as well, we should lock in. I've only been trading, I mean, what's trading? I think all of us been trading as soon as we see a stock go up. It's like, holy shit, that works. I believe in consistent consecutive strategies like 30 plus APY max, but for retails it's too boring. Yeah, man. Retail, they want to be able to like hit or miss overnight, right? But like I like for like you, I like boring stuff because boring stuff. There's that I think there's that PNC commercial, how like boring matters, right? Like boring gets you paid. Sometimes it doesn't have to be exciting, right? I mean, I can make it exciting because I think I'm someone that I'm not gonna say I have the gift of the gab, but whatever. But yeah, no, sometimes this shit is gonna be boring. Sometimes this shit is gonna get monotonous, right? But we got to be able to push past that, and in order to do that, but what you're doing here, I would say tap in and just figure out what the community owners want, and like you can be able to set up different streams or different web series for them to be able to point them back to your channel, and like don't be afraid to get super basic with them, right? Like, i.e., create a video. What is cryptocurrency? What is Solana? What is the difference between BTC and Solana, right? How what's the difference between a market cap, right? Why does liquidity matters, right? What is a rug, right? Like shit like that. Like you really want to get super granular and don't assume anything. Of course, like you would know, like you already are working with these people that you want to create videos for. So that's the thing. Put yourselves in their shoes, right? Because you're already working. So this logic, so this is the logic that I am thinking of entering to trade when below is lower the channel flow. Wait, hold on. GD, you're saying so this is the logic I'm thinking of entering the trade when the below is lower than the channel flow. I agree, but what I'm noticing here is that we probably have to spend a little bit more time on this strategy because we're pushing on 2 hours now, and I don't want to make this video super long. and this strategy is looking like it's about to fizz out here. So what I have to do, like, I have to really take a look at and figure out why this strategy isn't working, and then but we're going to figure this out, and I'm going to get this strategy to work because I think this one has bones, but I think it's just losing steam one way or another, right? Whether it's being able, yeah, it's at $26 right now. The channel flow equals HMA 9 over factor times the ATR. Oh, that's interesting. How has it been using so when it crosses above, you buy a call, when it crosses below, you buy a put? That's dope. No, that's a dope strat. I'm not going to hold you. And you base your stop loss on the ATR, or how do you base your stop loss for this strategy, for your strategy that you're building? Cuz that's an interesting way to enter. Yeah, it's at $20 right now, y'all. This is at always buy for now. How do you get out? How do you exit? Oh yeah, ATR. Okay, I thought so. Okay, so you base your exits off the ATR. That's not bad. And what period? 3, 5, 10, 12, 16, 14, 11, 2. Yeah. What we're going to do, we're going to stop it. 0 trades? I know that's wrong. Why are you oh, come on. All right, one of 5 things needs to happen. Oh, yeah, ATR 9. Oh, that's why you had the 9 up top. Oh, okay. Oh, that's what's up. That's interesting. Have you tried different periods? Maybe using a what time frame do you use? Do you use 1 minute, 5 minute, 15, daily, 1 hour? Okay. All right. First, it is still not saving the data once we interrupt it. Then second, the backtest is still kind of blowing up, if you would. I'm going to try to give you as much data as possible. Review the logs. Again, this is as much data that we can provide. Then let's discuss what we are missing here when developing this out. In TOS, it's using so like 1 second, sub-second. How is it with Thinkorswim? The only thing I don't like about Thinkorswim is that I'm going to launch one of our strategies from here to Thinkorswim once it's ready for live testing. But Thinkorswim doesn't have paper testing. Like, if it had paper testing, oh my goodness, I would take off with Thinkorswim because there's a lot of great things. I love Schwab. And there's a lot of great things that they offer as far as the market data is concerned. Thinkorswim has Gamma, and normally you have to pay for Gamma, right? Thinkorswim, it gives you a shitload of data that you can use in order to make your algo work, right? But the only thing I don't like about it is it doesn't have, yes, you have to trade paper trading manually, right? And I kind of hate that. That kind of goes against the point of algo trading, right? That's why I use Alpaca when it comes to, okay, hold on, I use Alpaca for paper trading right now, and I use Tradier and IBKR, but IBKR can't handle multiple bots, so that's why I kind of went away from Interactive Broker. And Tradier, it uses delayed data for its paper trading or sand accounts. For strategies, have you considered to buy grid bots so you benefit from the growth and volatility? That's a whole different other game. I would rather create than buy, because I don't know what said bot has under the roof, right? Or under the hood, excuse me. So I would rather create than buy, and that's something that we're going to be doing here on the channel soon. But y'all just got to give me a minute to get there. Right now, we're keeping it super simple, even though it's kind of complicated, but it's still simple. No easy automation provide. Yes, I agree. Like, in order for the automation, GD, like you really have to like understand. I mean, you could go through the API docs, and there's a couple of ways in order to automate your trading for the live trading, but for paper trading, nah, it is what it is. But they do have a couple of ways in order to automate it for live trading. For myself, I use Uniswap LP on Ethereum with wide ranges to yield 40 to 60% APY on that. Oh, that's what's up. That's a video. No, but that's what's up. And I think that is for buy, I mean long grid bots, not buying this. No. I understand. I understand what you're saying. But again, that's something that is just a little bit more. It's going to take a little bit more in order for us to get there, right? Get to that particular strategy. I have to figure out maybe I can like cross that over to options. That'll be interesting to see how we can do that. But hold on, y'all. Let's get back to this work to see. All right, how we can get this right. Too many time stomps. Almost every trade exited after 2 minutes with no TP hit. TPs are too high for 2 minutes. 14.8 minimum is hard to hit with 2 minutes. Bullshit. Account is bleeding $100 to 17 in less than 2 months. Only 3 trades visible in the logs. Your settings create an impossible situation. The max hold time. The TP is the lowest target, and 0 DTEs need time to move. 0 DTE options need the underlying to move 50 cents to $1 in a minute in order to hit the 14.8. That's rare. Increase the hold time. Give trades time to work. Fuck no. Lower the TP instead of. All right, man. You're being like a little baby right now. Let me drive the boat. All right. Let me drive the boat. Let me take a look at this. You know what? Let me try. Let me try this. Turn the require rejection. No. We're already getting trades. That's like if I wasn't getting trades, bro. I really think it has something to do right here. I really think it has something to do with our delta and then our premium. All right, let me drop the premium. Let me drop the premium from point. So the premium max drop to 0.40. So the maximum that we can spend on the option contract is $40 as opposed to 68. And then the minimum is $15. And then since you crabbing SL, let's move to 0.18. So I'll give you a little bit more room there. Max hold time, let's move to 3 minutes. And then for TP, let's do TP1, 24.8, TP2, 18.3, and then TP4, let's keep it at 13.48. All right. Require when to unlock. Okay. And make sure we are only doing 1 trade per day and not the unlock 2 trades that we originally had. Oh, my fault. I'm sorry. Damn, I forget that. My fault, y'all. I forget that if I toggle up and down, like it. My fault. I'm sorry. I fixed it. So what I'm doing is that I've adjusted the take profit or the premium maximum to 68 to 40. We've adjusted the stop loss from 12 to 18, and then the max hold time from 2 to 3 minutes. And then we've lowered the take profits as well, right? So the strategy is ready to run. She's ready to go. I think at this point, she's going to be Gucci. Let's copy. All right, Gucci. Yeah, you can trade the long SPY and make money from its volatility at the same time. Of course, you pay high commissions, but during sideways movement, it performs well. Really? That'll be interesting. That's the whole thing. I mean, I have to look into that because I don't know too much about the grid bots, right? Or that grid strategy. I think it holds merit. But again, I don't know too much about it. But that's something I'm interested to be able to see, and to see how that works. So I think that'll be a play. I think that'll be a play. You know what? I just need to keep it up here so I can take a look at it. So it's at $97 right now. So let's see how we perform. 75, 81, 84. Yeah, I'm not going to hold you. This strategy is looking like a no. And that's okay. 59. This strategy is looking like a no, but that's, you know what I want to do? I kind of want to get another one loaded. Oh, Max, let me ask you, do you trade um with the stock market or do you just trade whenever? Like when you go ahead and run your bots? Because when I was doing market making, I found a little, I mean, not all the time. Maybe it's just a little causation, not correlation. I don't know. I found a little increase when I used to trade when the market was open as opposed to trading like at midnight, for example, or just at like off weird hours. There's nothing like those weekend pumps though. Yeah, this strategy's cooked. I'm not gonna hold you. This strategy's probably cooked, y'all. Yeah, I'm still no trades captured before interruption. Run the full back test to see results. Partial results may be interrupted, not complete. Oh, bro, get the fuck. All right, I'm gonna try one more thing, and if this doesn't pan out, I'm going to consider this strategy cooked. All right, so we're going to do EMA 3, and then our short EMA, I'm going to do 8, and then I'm going to drop our entry time to 44, and then our bias window, I'm only going to give it 8 minutes, and then we're going to start trading at 38. Beautiful. I'm going to drop our delta min and then increase our delta max a bit. Drop our premium, increase the max a bit. And then do I want to keep this stop loss? Let's keep the stop loss, and then I'll increase it to 444. If you know, you know. All right, one trade per day. All right, I'm liking this. What do y'all think? So what I did is I updated the EMA. I made it a little bit slower, and then I dropped it and made the pullback a little bit faster. And then, oh shit, I'm glad I went over it again. Delta min and max, we adjusted that. Same with the adjustment here. And then I gave it another kind of minute and a half. All right. You should be Gucci bandana. All right. Now I'm going to run her again. But again, it's also okay to say when this one is cooked. I don't have access to traditional markets like the U.S. markets as I remain in Russian national, but based in Dubai. So right now, so if I change my residency, I can get. Oh, oh, got you. That makes sense. I'm actually a cyber. sec student right now. So doing strategies and bots on the side is the current job market. No, I agree, man. Listen, there's a lot of waves for you to be able to make right now, especially when it comes to like algo trading, development bots, and things like that. Like a lot of individuals want to be able to get into that market. It's just a matter of being able to number one, put yourself out there, and then number two, like it's okay to say that when you fail. I think this one is going to be a little failure, right? And that's okay, right? I'm okay with being able to say this one didn't make it. Let's start over. But to your point, Max, man, that's what's up. How much longer in school do you have? And what's I used to know a lot about that. Um, I'm not even gonna make myself look stupid right now. I used to know a lot about the cybersec world, but I'm not really in that world right now. Okay, talk to me nice. Talk to me nice. I don't know. I don't know if I'm like I don't know. It's like intermittent, right? It'll win one, it'll lose one. It'll win one, it'll lose one. It's kind of weird. It is kind of weird, fam. But that's okay. See, oh, 3 months. Oh, that's what's up, man. That is what's up. And especially what you're doing right now, I'm really telling you, it's going to help out. Like that could be a YouTube channel. And you could probably get monetized super quick off that as well. You know, like there's a lot of ideas out here for you, bro. It's just a matter of being able just to put yourself out there. Don't be afraid of the. I'm not, and again, I'm not wishing you failure. Again, I don't want to make it seem like I'm wishing you failure, right? But what I would say is that sometimes it does come, but how do you respond? $84. How do you respond when it does come, and like how do you bounce back, right? Let's let this strategy run. Maybe I'm not giving it enough time to be able to bounce back. I was talking about how do you respond to failure, but shit, this strategy is like I don't know, man. It's like it's showing me hope, but then it'll show me despair at the same time. I don't know. So y'all see, I'm really thinking this strategy is at like 50% win rate right now. Cause y'all see, we win, then we lose. We win, then we lose. Hmm. This is interesting. Yeah, I think I have to. Yep. This one is cooked, y'all. This one is cooked. I'm not even gonna waste your time no more. This strategy is cooked, but what I'm going to do. See, but then it'll win like this. Um, it was a good experiment. Yeah, no, I agree. I'm right there with you to be able to scrap it, but I still want to like have a pullback strategy because I still think that's the way to go, right? So what I'm going to do, we're gonna come here, go back to indicators, pull back, right? Let's go find another one because I still think this is a five, GD. I still think this is something we can do. But let's use what we've learned in order to pick one. Moving average pullback, L and L, arrow pullback, valid pullback plus trend. Okay, let's look at valid pullbacks and trend by KPT Gonzo. Let's look at that. So How does this work? Copy price. Okay. Invalid. All right. Check for bullish breakout above the structure. Check for the bearish break above the structure. Okay, let's take this. What I'm going to do is I'm going to copy. Let's go back to Claude Code. This one is cooked, so you're cooked. Thank you. We're thinking of pivoting. Review the following, and let's discuss before we build it out in backtesting. Yeah, that one was cooked, and that's fine. I'm always able to pivot, and what I want to do is just like I want to do this a little bit quicker, right? Because I've noticed a few things that could help us out with being able to build this out. All right, come on, fingering. This is a market structure indicator, very different from the MOP-I. Let me break it down. What this indicator does, the core concept is swing high plus structure breaks. So the pivot detection, that's funny, kind of ironic. Detection, find, function, and identify swing highs and then swing lows. It uses the price action to detect when the direction changes. No fixed look back period, purely price based. That's interesting. Two level structures. We have the internal high and internal low, short term swing periods, and then we have the external high, external low, validated slash confirm the swing points. The validation logic is if the swing high low is already validated when the new swing high forms after it. Okay, the break structure, the bullish BOS structure or the break of structure. The price breaks above the validated swing high, EH, and the price breaks below the validated swing low, EL. Okay, structured based pullbacks, dynamic pivots, bias from structure breaks, pullbacks to validated low and high. For 0 DTE, bullish BOX occurs when the price breaks above the validated high. Wait for the pullback to last. Wait for the pullback to last the last validated low, EL, and then enter when the price bounces off that level. The put entry is the same but opposite. Questions, replace or combine. 1, we are replacing it entirely and starting over with this one. 2, we are still working with 1 minute time frame. So what is the basis or foundation here that we should use? 3, once the touch of the structure level or require the rejection angle. Oh no. Enter once the touch of the structure level, and let's gauge performance from there. 3, keep bias system, still using the opening range plus the frame, or let the structure determine the direction. Nope. Yep, let the structure determine the direction. Now let's discuss. All right, we're about to build this out. All right, give us a second, waiting for the output. Oh, that's dope. Look at a nice little diagram. All right, good. Starting fresh from the structured approach, let me address a few points. Clean state. We're building a new backtest purely based off this structured logic. Foundation 1 minute time frame. Pivot detection. Track the direction up or down. When going up, if the prices makes lower lows and the swing high confirmed. When going down, the price is making higher highs. The swing low is confirmed. No fixed look back, purely reactive to the price. This is actually good for 1 minute because adapts to volatility, no lag for averaging and captures the real turning points. Potential issues is that the 1 minute can be noisy. We might need to adjust. We might need a minimum swing size filter. Swing must be at least 10 cents or 0.02% of SPY. Enter on the touch, simple and aggressive. We enter when the price reaches the validation levels, no waiting for the rejection. And then the structure determination. All right, bullish, price breaks above. All right, that's what's up. What do y'all think of this? I think this one's a little bit, it's a little more complex, right? But I think this works. Let's do 9:33 a.m. till 11:08 a.m. to right now. Let's trust the raw structure, then gauge how the performance of the back test goes. 3, what validates the pullback touch? The exact touch of the level within a certain sense breaks slightly through the recovery. Let's do the exact touch of the level. Let's start with the exact touch of the level. 4, yes, that's fine. Yes, I'm ready to build it out. That's what's up. Sometimes you just have to pivot a little bit, and that's what we're doing. Building now. I didn't even tell you what this is called, and you're saying building it now. Okay. It's okay. Perfect. Ready. Let's call this back test another one. Another one. BT.py. Let's proceed. Keep the same level of logging doc strings, and also improve on the when we're in position. Right now it is a bit confusing. Let's fix and create the back test. All right, we're creating our second back test. This one's going to be based off of the Pine script that we just pulled, right? It's still pullback strategy, but it's going to be using another base. Our strategy that we've had, I need to look under the hood a little bit more and figure out why it's not working. So I'll do that on my time, but to make sure that we get a basis, a good starting point of a strat, what I'm going to do is start this over. And then what I'm looking for, right, is a win rate past 70%. What I'm looking for is a Sharpe ratio that's a little bit north of like 0.5, but really 0.75, right? What I'm looking for is a max drawdown that's less than 20%. Looking for a profit factor that's a little higher, like 4, 5. If it's greater than 2, then we're Gucci, right? And I mean, I'm not looking at the overall return per se. The metrics can make the match the return, right? So as long as we have the metrics perform well, then the return will take care of itself. But I want to make sure that we allow it to do its thing. We allow it to do its thing, and then there's no issues, homie. And if there's any other questions on why I pivoted, what made me go to this other strategy, what is a pullback, right? You can ask, and I can assist you, right? So right now I'm waiting on this back test to finish out, and then we're going to run it. This will be a good, I think this is going to be better. I'm not going to hold you. So let's keep this work in. And also, we also need to do is just go ahead and update our steps taken as well, because I forgot to have it updated. So yeah, we're gonna update this as soon as it's done. Let me just write the message so I can just hit enter when it's ready. Then update with where we are right now, so we can keep track. of it. By the way, how are you making nice? Oh, vidIQ, vidIQ, vidIQ. I would recommend just go ahead and go get vidIQ. It is worth every penny. Maybe for future videos, a tutorial on how to duplicate the environment you have, the tools required, and the prerequisites for the setup, and where to find the tools. I admit I am a bit overwhelmed. I will definitely do that next time. I thank you, GD, for letting me know. What I'm going to do is, what would, okay, I think you already gave me a roadmap on how to do it. So I want to make this a lot more simple for us whenever we come to being able to duplicate it. And again, you can always stop me. And if I don't look at the comments, I'm trying to do a better job of, you can always stop me and let me know, hey, I'm confused. Let me know what the hell you just did. Right. Like, I don't mind being able to stop and just go over this again. Right. Like we did for TPs. Right. But I got you. I thank you for that feedback. And I'm going to take that. And moving forward, I'm going to try to do a better job. Excuse me, a better job of being able to really break this down so we can understand what I'm doing, why I'm doing it, and how it makes sense. Yeah, but Max, vidIQ, VIDIQ, just go ahead and go get it. It works. It does everything for you. It doesn't do everything, but it makes this YouTube thing a lot better, a lot easier. Not easy, but a lot easier. That's what I would say. All right, so we can see the balance down here. Right now it's at $78. The first two trades were losers. Hey, no problem. No problem. Each one teach one, right? Each one teach one. No issues at all. All right, we just got our first win. That's what's up. Trade lost. Did you update the steps? Yes. Okay, step 17. All right, beautiful. We're seeing a lot of trade lost instead of trade won. Okay, come on. Come on. We're seeing a lot of trade lost instead of trade won. Damn. It definitely okay. All right, y'all. We're crossing over to like 3 hour territory. I'm thinking, and again, hear me out. This is a good stopping point. This is why, right? Tomorrow, I still have to paper trade our bots, right? So that's still something, and this strategy is looking like it's not performing too well. So I really need to look under the hood. Matter of fact, let's wait. Let's wait. Let's wait. All right. I think entering immediately is. Let's look at the back test. Let's look at the back test. Stop, max hold, debug. Okay, hold on. Min swing size. Low key, I think we need to add a min swing size. Yeah, I think we need to be able to. I think we need to add a min swing size and then drop our. All right, this is the last little update I'm going to do, and then depending on how it works, we're either going to keep going or I'm going to stop. So I'm going to drop this to 244. I'm going to add a max min of 10 cents. And then I'm going to drop you to 932. And then 1058. Oh, shit. That's like super wide. 58. What else? I don't know, but like you're still like bugging me over here. Let's go 70. And then let's go 58. Let's go 10. Let's go 15. Okay. This is good. This is good. All right. Let's see. Now let's run it. Now let's run her and let's see how it does. We updated a few things. And I am very, very interested to see how this was going to work out. Listen, I really do appreciate y'all for sticking around and allowing us to being able to go through this. Because I'm not going to hold you. All right, hold on. It's at $93, y'all. I think I like what I just did. Okay, let me shut up. Let me wait. Let me wait. Let's wait and see. Okay, first time over $100. We are at 105.24. This is just interesting. You know, there's parts of I really think we need to add a confirmation. Whether this confirmation being the volume, whether this confirmation being momentum, right? Because it looks like we're catching some good trades. And I'm not going to hold you, GD. Maybe I'm going to make that video tomorrow. The video you recommended on just a tutorial on how to being able to set up the environment, the tools used, and the prerequisites for the setup. I'll make that tomorrow because I don't mind. I'll make that tomorrow, and then I don't know if I'm going to do that live or I'll just do a VOD and then drop that tomorrow. But y'all will get that tomorrow, right? And I'm also going to be paper trading tomorrow as well. We have 14 bots that we're going to be running, all from momentum break. Majority of them are momentum strategies. We have a few mean reverts in there, trend following strategies. Okay. I don't know. I mean, this is the highest I think I've seen this pullback strategy for. All right, I have an idea. And again, I don't know if this idea is going to work. This is like I'm just pulling in something out my ass. I have an idea. Let's flip the logic, meaning what we are doing for calls now. Let's enter a put and vice versa. Does that make sense? Review and advise before doing it. I just haven't, just based on what I'm looking at, right? It looks like we're catching the opposite side of the signal. And if we're catching the opposite side of the signal, if we're catching the inverse, let me just test the inverse if we were to flip it and to see how well it performs. Now, I don't know how this is going to work, right? this is countering the trend betting that the BOS was a fake out and the price will reverse. Yeah. I'm testing this out just to see how it was going to work, right? The current logic, buy calls, buy puts. Now, bullish breaks above. We're going to bet is going to bounce, go down, and we're going to bet is going to go back up. All right, let's see how this works. Again, this is just an idea. Sometimes you need to pull out these left from the field ideas and to see how well your strategy is going to work with that. So I think this may work well, or it may just completely blow up in our faces. I don't know. Let's see. I've done this maybe once or twice. Flipping the logic. It's just I'm looking at the back test. So if the back test tells me that maybe we can flip it and win, let's try it, right? So I look at the back test first, the results, before just flipping logic. So I think this one may work, but I don't know. Let's see. But it also could blow up in our faces. So let's see. Ooh. The first 3 trades. Yep. Yeah, this is not looking good for us, fam. I mean, we barely won that one. I'm saying barely won. Yeah, I think we need to just instead of just keep retrying because we're getting diminishing returns at this point. Literally, diminishing. Yeah, we're getting diminishing returns. All right, so this is what we're going to do. We're going to take this as a stopping point, and then we're going to come back tomorrow, and then I'm going to continue this PB&J strategy, this pullback strategy. And then what I'm going to do is look under the hood and just see what I'm missing. And then tomorrow we're going to have this tutorial video that GD asked for, so I don't mind doing that. And we're also going to be paper trading our bots. So I need y'all to, if you're not already, make sure you like and subscribe. It is your boy Creative. We'll be back at it again with another episode. And I want us to be able to understand that sometimes strategies don't work out, right? Sometimes we need to be able to put a pin in it, step away from the computer, and then come back to it, right? And I think this is a point where VOD is fine. That way I can prepare questions for the next live session. Long live traders and be profitable. Same GD. I appreciate you, man. Listen, until next time, listen, I really appreciate y'all sticking in and being here with us. Sometimes it's not going to work out for our benefit, right? That's okay. It happens, right? Shit happens. Like, I don't want to sell y'all just dreams, right? Sometimes we have a little bit, I'm not going to call it a nightmare, but just a little bit of a little fright, right? So I'm going to take this back to the lab, and then we're going to restart on this tomorrow. But again, I'm super excited for the paper trading session that I'm going to be having here with y'all tomorrow. So make sure you tune in for that. It's going to be 9:30-ish a.m. EST. I want to try to come in a little bit before, but that's the time that I'm going to be starting as soon as the market opens. But listen, if you're not already, make sure you like and subscribe. It is your boy Creative. We will be back at it again for another episode. And GD, be on the lookout for that video.